Hey, Mike, what's up?
How you doing?
Good. So I know DSCR has really been taking off in the last 6 months, so you've told me. And I'm curious, what are like the top questions as people are checking out this loan type that's, making a comeback? What are the main questions they have about it?
Well, you're right. I mean, the last 6 months we've seen people come back to DSCR because in 2020, 2021, it was a very popular product just because the rates were so low. Rates went up. Now rates are coming down a little bit. So they're in that zone where they're starting to cash flow again. We keep hoping the Fed will stop messing around and lower them again to even make this better. But typically, there's the box. If you own a 1 to 4 unit, there's all kinds of options and loans available for you. Meaning if you have a single family, a duplex up to a fourplex, everyone has options for you. I think the biggest questions we get is kind of like what's on the outskirts that's not the 1 to 4plex. What happens if you have an 8 unit or a 12 unit?
Yeah, I remember we talked about that recently.
Yeah,
What if it's more than a 4? It's technically a commercial property, right?
Correct. Once it gets to 5, it's a commercial property. So are there options for them? And there are options. They're just, less lenders doing those kind of loans. We're just helping a person with a 24plex now. So we have a 12plex we're doing, a 24plex, a couple of 8plexes. And those kind of, they come out, they are their DSCR options. And typically they are, but they're the commercial loans like we talked about, which is just a little bit different. Instead of like a 30-year fixed, it's like a 10-year fixed on a 30-year AM. So there's options for these people, and they're getting bigger and bigger. So, we've seen some that go up to 100 units where they could use kind of the DSCR. But, somewhere it did make sense and it doesn't. But all these people who have those 5plexes to 12plexes to even 24plexes, there's options out there now for them in the DSCR range that probably wasn't there a couple of years ago. So that's probably one question. Are there options for multi-families above 4 units?
Yeah. So is it fair to consolidate that as like, are there options for commercial properties with DSCR?
Yep.
Anything above 4?
That's a great point too, because there are options, especially at 8 below, if it's mixed use, which means part of it's commercial, maybe the front, the first floor is commercial and the top floor is residential. As long as commercial is below 49%, the majority is residential, and the rents are, there's even options for the mixed use.
Okay, so there's options for mixed use. Typically, if it's below 50%, below 49% of it is commercial. It still has to be majority residential.
Correct.
Okay. What are some of the other questions that you get?
What kind of documents? Because we have people who are like, we've heard it's easy, it's this. What is the minimum we could give you to qualify? And there's still some things that you need on DSCR. But the biggest things, if you're doing a refinance, let's say, you need a lease agreement. So what are you leasing and what is your lease agreement? You're going to need your business entity set up. So what is the operating agreement? That's the paperwork that shows everyone who runs and manages the company. And you're going to need some reserves, so a couple of months bank statements, taxes and insurance, and we title and appraisal. I mean, it's
Let me see if I got all those.
fairly easy. Yeah, we're going to need to go through the leases to make sure we're good.
So the operating agreement of your company.
Operating agreement of your company. Then we're going to need, we're going to check the value, so we're going to need that appraisal.
Yeah, okay.
Because it's based on appraisals. And then to remember to check the DSCR ratio, we're going to need your taxes, insurance, HOA, and flood if there is those.
Gotcha, all those. And you also mentioned we need reserves, so a couple months bank statements too.
Yeah, a couple months, either bank statements or money in a retirement fund or any kind of investment fund where they just show somewhere between 2 and 3 months of reserves is typically there. And the nice thing with cash out, sometimes if you don't have those reserves, you could use the cash out that you're refinancing, get cash out. You could use some of those reserves to cover your requirements for the underwriting.
So not too much, but a theme that we often have here is that you will need to do a little bit of homework to get all of those things ready. You're not just going to be able to have them on a call. So it's good that people call you and figure out what those things are, the documents, get them in a row, and then you can apply.
The other thing is it's a quick loan, and people always ask, how quick can it happen? And the quickness is really based around the appraisal. In each area of the country, appraisers are either busy or not busy or want to do, like as fast as an appraiser could get out there, you could close in days after that. So we get a lot of people like, hey, we're closing in a week. Can we do a DSCR? And it's like, probably not, just because there's another third party involved or even two. There's a title company, there's the appraiser. But a quick DSCR loan is probably 2 weeks.
Okay.
The average is like 3.
So that's what you were saying is like
Yeah.
if they're closing in a week, that's a bit too quick.
Yep.
But a quick one for 2 weeks is fast.
Yep.
Under that, it's going to be a little bit, it's probably not going to be work. It's going to be too fast.
It's going to be too fast, and there's workarounds. We just had a client reach out yesterday, and they're like, we are closing next week. We know it's too soon, so they're going to take their money out of an account they have and buy the property, and then we're going to do a delayed purchase, which means we're going to act like it was a purchase on the DSCR, even though they've already funded it, so they could get all their money back into their accounts. But they found a great deal. It's on a duplex. They wanted to close immediately, so they used their own money. So then we're going to do the delayed purchase refinance. It's a mix between a refinance and a purchase because they've already owned it. The DSCR is acting like the purchase, and we're going to give them 80% of the purchase price, and it'll be a way for them to get their funds back and go on to the next deal. But they found a great deal. They wanted to close fast, but DSCR just does not close within a week.
Okay. But there are ways to work around it, it sounds like, if you have the reserves, which they did.
Yeah. Have the reserves, use private money, all those kind of things to buy it, and then quickly refinance it too. So unlike the BRRRR where you're buying something value add, this was a retail, which means to me it's turnkey. Someone's going to buy a property. In this case, there's renters already in it. They're just buying it, keeping the renters in it, and they're not going to fix it. They're not going to do anything like that.
Is that what turnkey means? It's just like we're just changing out who's the owner?
Turn the key and you're ready to go. It's like walking into a hotel room. Everything's done and
it's all
ready.
done.
Yeah,
That
you're
makes
not going to do anything. So there are options out there for when you find something that is not like a BRRRR or value add that you can still use DSCR even if it's a quick close. It's like a quick bridge, or you fund the deal yourself, and you could get a delayed purchase loan with DSCR after.
Okay, awesome. So what's one more question that you get from people about DSCR loans?
I think the other one is what happens if it doesn't break even? Because the DSCR ratio is what it's all based on. And DSCR ratio in its simplest form is like the break-even point, where your rents equal your expenses on that property, which are your payments, principal and interest, taxes, insurance, HOA, and if there's any flood. Those two breaking even means there's a DSCR ratio of 1. The majority of lenders want the properties to break even, and so do the investors. But there are those times, and it's probably getting more and more, where people have either a bad loan or a hard money, private money loan, or just a loan they need to get out, but the property is not cash flowing. So in that case, the DSCR ratio is less than 1. So since the DSCR ratio is less than 1, what are your options? And there are options out there for basically no income. Typically, a lot of them go down to 75%, but some go down to not even checking income. So there are options for those. It just comes with a little bit higher rate because, of course, it's not breaking even. So they're going to charge you more. So it's going to cost you even more once you break that threshold. Rates go up and the loan to values go down. So maybe on a typical DSCR loan, you're going to get 75%. Maybe on something that's lower, you make it 70 or 65. There's a lot of people out there who are sitting on properties that are not selling, or the property has a lot of growth potential, and they're just keeping someone in there for a couple of years because the market around is changing, and they know like, hey, it's worth $200 now, and 2 years it's gonna be worth $300 or $400. I'll take a couple $100 loss, but what are my options other than always hard money? And there are DSCR loans for properties that are not cash flowing or even breaking even.
I think so. Like, if I'm understanding, a ratio of 1 is ratio of you're breaking even 1 to 1, and then that equals 1 on rents versus everything else.
Yep.
And so usually you want that. Usually you want the ratio of 1, but there are options for those that don't have that. And it sounds like there are a couple different situations where that could be the case, where it's like for example, it's the market that they're in. It's going to be promising. It's going to turn around. So the lender would see that and be like, yeah, we'll float you.
Yep.
But it's going to be a higher rate because of that.
Yep.
Okay.
Yeah, there's just areas that people see growing, and maybe they, like I said, they have a property with, and if they just keep it another year or two, get a lower prepay instead of the standard 3 to 5, maybe get a 1 or 2 year prepay, pay the high rate, but just in case they need to keep it longer than a typical hard money loan or private money loan of a year to 18 months, and they need to keep it 2 or 3 years, but they just see the equity growing, and it's just kind of like putting money into a retirement plan. Like they may have to put $200, $300 a month into it, but in 2 years it might be worth another $200,000, $300,000, $400,000. So it's worth them to put some money into a property like that. It's not every property because most investors want monthly cash flow. They want the money to come in. But there are deals where they look at it as more like, we have a pot growing over here. Let it keep growing, even if it costs us a few $100 a month to make it work.
Well, that's helpful. It was all informative. There were 3, I remember, right? There's this ratio question. Are there options if the ratio isn't 1?
Yep.
What kind of documents do I need? And remind me what the first one we covered was?
What do you do if you have a property that has 5 or more units? So
That's
there are options.
commercial properties, yeah.
There's options out there for those commercial properties. There are options out there for people who have less than break-even properties. And then what is the documentation on all of these? What is the stuff that you need to have and have ready? So it's important because DSCR is becoming more and more mainstream with the investors. They see it more, they understand it more. But now it's kind of like, what is growing in DSCR? It's the commercial, it's the 5 units. It's some non-warrantable condos, some rural properties, like stuff that probably wasn't in the box before, that DSCR is opening. So if you have something that's unique and it's still a rental property, there are more and more options out there for them, especially under the DSCR umbrella.
Awesome. And to learn more about those options, they can just
reach out to us at thecashflowcompany.com or email me, Mike at thecashflowcompany.com. We'd be glad to go over your choices. We have a great download where you can just figure out your own DSCR ratio on our website. But we have many options. We're always out there looking for not only what the best rates are, what fits in the box, but what's unique. Because in investing, a lot of the good deals are the unique ones.
All right, awesome. Well, thanks for talking today.
Thanks, Michael.
Yeah.